Adam Schwab, what's your feeling about what is going on with Europe and how kind of easily this can really be resolved, both with the economies and the governments getting into their austerity programs where they need to, sticking to, you know, trying to reduce budget deficits and debt, and on the other hand, you know, the banks sorting out who they actually owe money to and who's going to default on those loans?
I love that in the last, I think, month we've seen the rise of the word austerity. It's been remarkable. I hadn't heard the word austerity ever mentioned, I don't think, and now everybody seems to...
You're too young, Adam.
in this sense. It's, but what's surprising is that austerity is some sort of unusual step to be taken. It should simply mean a country spending less than it earns, but what's so surprising is that so few countries seem to do that. And if you're a household and you're continually spending more than the income you can bring in or the income you can foreseeably bring in the near-term future, nobody would lend to you. But for some reason, for sovereign states and especially in the Eurozone, people were still buying Greek bonds. If you gave me money, I wouldn't buy a Greek bond with that money you gave me. It's very surprising. And then you've got actually, I was reading just this week, one of Andrew's colleagues at the Australian, I think Scott Murdoch, who's on this program, also was saying how NAB owns $5 billion worth of Italian sovereign bonds, which itself doesn't sound especially like an investment I'd like to have. It's been reduced from $12 billion, but whether NAB shareholders will be overly impressed with their executives using their capital to buy Italian sovereign bonds would be something I'd be questioning.
All right, Adam, do you feel, though, that we should, as an economy here, given that we've talked about some of the strength in our own economy, should we be seriously spooked by what is happening in Europe?
If you believe the world is interconnected, and I think it's the last 3 years have shown that it very much is. Europe's a very big economy. It's still a very big buyer of Chinese goods. And if Europe stops buying Chinese goods and the Chinese stop buying Australian raw materials, will certainly have an effect here. So to claim that Europe's sort of an isolated case is probably giving them less credit than they almost deserve. And then you've got the issue with the euro and whether that's sustainable in the long term. I've always been very much a Eurosceptic, and I think many Germans are becoming Eurosceptics now as well, given the recent events. So that's a new issue. But to say it doesn't affect Australia is probably taking a little bit of a myopic view. I think it certainly would, if not directly, indirectly.
What's your view about the market in general, and perhaps whether, you know, what you feel about these IPOs, particularly, say, the Bilfinger Burger, which is going to be Valimas?
The market itself, and I defer a lot of my views to Roger Montgomery, who's well known to Fox Business viewers, and his view is, and I tend to agree.
Viewers, you mean?
Exactly, and his view is there are some very good companies out there, in the likes of Seek, Reject Shop, JB Hi-Fi, but they seem to, I hope I'm not misquoting him, quite fully priced. So you look at some of the best companies in Australia, and they're not cheap, and as some sort of investors prefer to say, why buy retail when you can buy wholesale? Why buy when the market is at a quite a high level? And the market has bounced substantially off its lows of March 08, and it's still obviously well below, March 09, well below its 6,800 high. But you look through and there don't seem to be that many bargains. And just noting on Greg's point on Foster's, the reason why Foster's been such a bad performer, especially in recent times, was obviously the wine. Wine has been a complete fiasco. But the other reason is they've lost a lot of market share in beer. They've lost a lot to Lion Nathan. And that's been a real problem for them. And they're down to, I think, 44% market share from above 50%. So that's been, because it's such a good cash driver for them, losing that profit on beer has been especially hurtful, and they've had a recent bounce because they're unlocking a lot of value. The market's valued the wine business at zero, but if they split it off, it'll be probably worth $1 billion plus. So that's where the recent share rebound seems to have come from. I'm not sure what Greg thinks of that, but that's sort of how I've sort of seen the Foster situation.
Yeah, well, about this briefly.
So I think the Timberwolf one, John Paulson wasn't involved in, but It's just, I guess, to take a step back, the action's been brought by the liquidator of the Basis Fund. There's no way a hedge fund manager would take such a claim because it makes them look like complete idiots. Simply, they're meant to be sophisticated investors, and you're paying them 20% on profits and 2% of funds under management. These guys are geniuses and far smarter than all of us.
Yeah.
And they've invested in what was described as, well, you know what it was described as. So it was atrocious management by this Basis hedge fund. It was, I think, voted hedge fund of the year at one stage. So that says a lot for the hedge funds.
So
out there.
Adam, you're essentially adding to this view that it really should have been caveat emptor. These guys should have known exactly what they were getting into, and it's their fault if they didn't, because they are the smartest guys in the room.
And just one final point, the lawsuit's for $1 billion and they lost about 70 million. So I think 930 million's punitive damages, which is the liquidator claiming that the Goldmans were such bad people they deserve to be slapped on the wrist to a much